Hello guys, today we are speaking about multi-time frame analysis. Trend is your friend. This is what many traders say, and it's true. It's true, definitely true. Knowing how to read the trend correctly is essential to have more in terms of dollars in our capital at the end of the month. Okay, indicators, price action, technical analysis, patterns, news, macroeconomical analysis, etc., etc. They all are very valid elements to give you confirmation of a possible operation, a possible trade, together with a good strategy, obviously. But nothing is more effective than and more accurate than multi-time frame analysis. Nothing. To understand where the price will go. Obviously, it takes training, it takes a correct psychological approach. Over time, don't worry, you will acquire everything if you want. The important thing is to start with the right tools, such as multi-time frame analysis is. Okay, so the concept is very simple, and it is always the same. The higher the time frame in which the analysis is being done, the more the same analysis will be truthful. Okay, so I'm not saying that the market is easier to read, but the price in the higher time frame is much less affected by manipulation or simply by all those senseless movements made by the filth of the institutional. Okay, for my strategies, in particular from the ST strategy, understand the main concept of multi-time frame analysis and understand how to do it correctly is essential. It's essential. Okay, so I just want for you to highlight this concept. So you have to training a lot to make yourself a guru of a multi-time frame analysis. I usually start from the monthly. Let's give you an example. I start from the monthly. I never open a trade because of a price action signal seen in the monthly time frame. No, okay, but the monthly time frame is essential to understand the willing of institutionals. Okay, the very big trend where price at the end of all life, at the end of the year, we can say, wants to go. Let's make this example. So I take this candle. Okay, this big candle on the Standard & Poor's, and let's go down on the week. As you can see, on the monthly time frame, you see a candle like this. Okay, sorry, very bad candle, this one. So you see just a big movement. Okay, as you can see, in the weekly time frame, what we see is different. As you can see, and there is some movements. Okay, some structures, maybe this one, for example. If you don't know yet what the structure means, don't worry. We'll speak about it in the next videos. So a big blue candle or green candle. I use blue and orange, but the big green candle, the monthly time frame, is just a correction, just some big movements on the weekly time frame. Let me show you by the way. Okay, look how many swings there are in a monthly candle. Okay, this could be, maybe it's a structure as well. In fact, as you can see, price reacted 3 times. Let's move down again on the daily time frame. On the daily time frame, as you can see, this probably is our red candle. November, yeah, from October here, yeah, till here. Okay, so in the daily, as you can see, we have other price movements that we weren't able to see on the weekly time frame. Let me remove this one, but as you can see, this is a structure, okay, from which price lots of time reacts. Okay, the reason for which, even if a monthly or a weekly or maybe a daily as well, are not time frames from which we triggered, from which we open a trade, they all are essential. They all are essential to avoid so many mistakes. For example, we are in the daily time frame, and I was sure that in this area, that is a structure, I will never open a buy signal, a buy trade. Sorry, a sell trade, a sell, a short. Even if the price goes down strongly, I know that this area is probably is a demand area. Okay, so probably it is full of buy orders, of long positions that they have to be downloaded. Okay, yet. And this condition maybe is it will be hide on a 15 minutes time frame. Maybe I will not remember of this area on this 15 minutes time frame. So it's very important begin our analysis from the higher time frame. From our strategy, for our strategy, we will do it. We will see it. We first analyze every cross on the monthly and on the weekly time frame as well, to try to find a good setup on the daily time frame, and we use 4-hour time frame for the trigger. The 4-hour time frame, it's a middle way, it's a middle time frame from which we can see, we can try to understand what kind of direction could price have for the next day or for the next week. So before everything, for all the crosses, for all the assets, index, stocks, all everything, all the tools you want to trade, the first things you have to do is this one: go to monthly time frame and try to highlight to find out all the structures. Why it's important? Because, as I told you before, in these areas I will consider only one direction trade. Okay, I mean, this is buy, this is buy, this is buy. Now, then, if price, for example, make just a reaction, then go down, break, and then comes here, I only consider a short, obviously. Here, buy, all this area, buy, sorry, here buy, okay, then break down, break out, sorry, and then here only sell. Same thing here, buy, break out, on the retest, only buy. As you find out all the structures, all the key zones on the monthly time frame, you can go down on the weekly time frame and try to fix all these areas, try to give them a confirmation. Like this one, you can fix here. I see probably a structure here as well. You can color on another with another color when you find a weekly zone. Okay. Obviously, that if price make this movement here, we only consider a buy trade. If the price make this kind of movement, breakout on the retest, ça va sans dire, as French people say, only sell. Same thing here, buy, consolidation, breakout, retest, sell, buy, breakout, sell, retest, breakout again, here buy, retest, etc, etc, etc. I think you understand. As price makes all the movements, a new structure, a new area will be created. But I repeat, is fundamental. Do these analysis, make these analysis on the monthly time frame, then a weekly, and then obviously on a day time frame for my strategy, for the ST strategy, which is my personal swing trading strategy, basically on a multi-day approach. Obviously, this kind of analysis is very, very important, is essential. But for the 5 amp, which is my strategy, based on 5 minutes time frame, so it's a intraday trading, intraday way to trade. This analysis is very important as well. Just because find out all these structures let me avoid common mistakes. Let me avoid wrong trades. So don't forget to do this analysis. And if you trade on intraday, so on 5 minutes intraday, or 5 minutes time frame, or 15 minutes time frame, or 1 minute time frame as well, make this analysis also on the 4-hour time frame, also on the hour time frame. Okay, it's very, very, very important. Okay, see you next lesson.